Ignition sequence start. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and we've got ourselves a little bit of market movement. This market's acting like it wants to move a little bit. We're at 221 XRP. Bitcoin's gotten over 92,000. A lot of interesting stuff going on right now. In a few minutes, we're going to have the XRP ETFs will be live for trading on this Black Friday. Right now, we've got 600 million assets under management in all the ETFs. There's 270 million XRP locked up, and things are going to get more and more interesting over the next few months. This is going to be fun to watch. These crypto markets, there's a lot that's been going on, and there's some good videos out here where you can get a complete picture of what's going on, and what's coming.
Been helped by the wealth effect.
This is Pantera Capital, one of the guys from Pantera Capital.
And so that's worrisome because that's not sustainable for the long term. There's also bubbling credit quality concerns where there have been a lot of frauds that have been uncovered in the private credit space. And then, overall, the big thing that's been driving risk markets has really been the AI CapEx spend and the productivity that hopes to bring in, but certainly that today the employment and the growth it's bringing. And everyone's now worried about bubble fears. I think all those are overdone, but certainly that is the topic du jour. At the same time, the Fed has gone a little bit back and forth on how they're thinking about December cuts. If we go back just a month ago to before the October FOMC meeting, the market was actually pricing in 100% chance of a Fed cut in December. And then after that meeting, when they struck a hawkish tone, they actually lowered all the way to 30%. And it's now back up to 80 as there's been a lot of back and forth and economic data indicators have come in weaker. And so now the Fed is more likely to cut, but maybe for the wrong reasons, which is because there's a weakening environment. And so all that is weighing on risk sentiment. When we look at crypto specifically, I'd say there was a very large sell-off that began starting on October 10th. And that event ended up being the largest liquidation in crypto's history. Over $20 billion of interest, open interest or positions were taken out and liquidated. And so after any massive event like that, we're just going to see a long period of digestion as people pick through which counterparties are doing okay and reevaluating the risk positions. And so in the same backdrop, if at the same time the macro markets are slowing down and crypto's going through this digestion period, we're going to see pretty meaningful pullbacks. And so I think that's just what we're going through right now. We're just seeing this natural consolidation and digestion. But ultimately, I think, as markets do, we will climb the wall of worry and things should be back to, after we get through digestion period, I think things should be back to climbing to new highs.
Okay, and then we've got this. This is part of the positive things that are coming.
Don't you love tariffs? Here's $2,000. Not only is Trump talking about it on Truth Social and it's being reposted to Twitter as it does, but Besant's also talking about it, which makes it seem to me like it is a little bit more real. Like, I feel like there's stages of Trump has an idea and he just tweets it out, and then it's like you see who else talks about it and in what venues. So the fact that Besant is now talking about it makes it seem a little bit more real. I don't know if I have a ton more to say other than the fact that they're talking about stimulus checks to me is another indication that we're not like post this period. 2021 was like the excess period, right? 2020, COVID, all this stimulus, all this low rates. And then the end of 2021 and into 22 was the reversal of that. Like, we're just not experiencing that now. Like, we've talked about, the Fed is ending QT. They're likely going to do gradual QE. Interest rates are gradually coming down, at least at the front end by the Fed. They're talking about stimulus checks again. We're going to get into the 50-year mortgages again as like another tool they're using to basically support the housing market and support younger people buying homes. Again, to me, this makes the point that we're not in an analogous period of November of 2021. Like, we're not turning the corner into tighter conditions and risk assets.
Turning the corner into them gunning this economy is what we're doing. Now, these poor Bitcoin maxis, I know it hurts them to acknowledge XRP, but one thing I've been telling you is that in this utility run post-legislation, what you're going to see is a consolidation of all the liquidity into the top tier, probably American crypto assets. They'll be designated blue chips. XRP will lead all of that. These guys try to, even though they mention it, they try to downplay it. They know. It's unfortunate for these guys. They're having to get out of Bitcoin playland.
The important takeaway here is, though, that as we've said before, TradFi this year, 2025, has been the marginal buyer, and they continue to be. That means Bitcoin and Ethereum, and to a lesser extent, maybe Solana, XRP, but mostly Bitcoin will do well and will continue to do well. But all the other alt complex, every episode we get people asking about, what about alt season? What about meme coins? All that institutions can't touch. And even when they can touch, which is not very many of them, they don't want to. It's way outside of their risk purview. So you kind of have this bifurcated market within crypto, which is these majors are doing reasonably well, even in this drawdown, and they will do well going forward. This alt stuff is just not going to do well. It hasn't all year. So pretty much the advice would be don't buy it, right? Don't buy. The
question is how's Bitcoin going to do when it becomes an alt?
These meme coins, don't buy alts, because the only people who are buying them can't touch it.
Okay, odds of Federal Reserve cutting interest rates in December rise to 85%. You can see everything formulating. Now, this is important, folks. What you're listening to, this is a guy asking Warren Buffett a question. And Warren Buffett is explaining to him why he prefers stocks to real estate. This is very important for where we are in crypto. A lot of people don't realize it yet, but they will.
In today's environment. Thank you.
Yeah. Well, in respect to real estate, it's so much harder than stocks in terms of negotiation of deals, time spent, the involvement of multiple parties in the ownership. Usually when real estate gets in trouble, you find out you're dealing with more than the equity holder. But there have been times when large amounts of real estate have changed hands at bargain prices, but usually stocks were cheaper, but they were a lot easier to do. So Charlie did more real estate. Charlie enjoyed real estate transactions, and he actually did a fair number of them in the last 5 years of his life. But he was playing a game that, and it was an interesting game to him. But I think if you'd asked him to make a choice when he was 21, he had to either be in stocks exclusively the rest of his life or real estate the rest of his life, he would have chosen stocks in a second. There's just so much more opportunity, at least in the United States. There's so much more opportunity that presents itself in the security market than it does in real estate. And in real estate, you're usually dealing with a single owner or a family that owns maybe a large property they've had a long time. Maybe they've borrowed too much money against it. Maybe the population trends are against them. But to them, it's an enormous decision. When you walk down to the New York Stock Exchange, you can do billions of dollars worth of business totally anonymous, and you can do it in 5 minutes.
Now, against that backdrop, listen to this.
For example, that is basically a stock which is issued on blockchain. That's the same technology on which crypto is based. Industry insiders I have spoken with have said that eventually you will see the entire financial market run on blockchain. You started to see this with stable coins, and then now we're starting to see it with equities. We've heard of the announcements of Robinhood introducing 200 US tokenized stocks in the EU. Gemini also offering tokenized stocks in the EU. Those are more derivative products that are not available in the US. But you've had the NASDAQ NASDAQ that has asked the SEC for permission to be able to offer tokenized shares, tokenized securities on the NASDAQ. And that's because of this wave of the entire financial infrastructure, which is expected to upgrade to blockchain. And they don't want to lose ground to platforms like Coinbase, like Kraken, like Gemini. This is a big market. Just to show you what one study shows is that real world assets, the market cap for real world assets is expected to go from 600 billion this year to about 19 trillion in 2033.
So imagine, so Warren Buffett's complaint has to do with, if you're buying real estate, you have to go to a closing table, you have to deal with a buyer, you have to deal with all the paperwork, deal with all the transaction. Imagine the Trumps are already talking about doing it, tokenizing some of their buildings. So imagine that same Warren Buffett can go back and forth without dealing with all of the things he has to deal with. Now he can buy tokens in these real estate properties and go back and forth into stocks in seconds. Imagine how that changes the game for people that hold real estate if they can tokenize their properties or tokenize anything. This is going to be massive. This is an interesting little clip about why did BlackRock choose Coinbase and not Binance?
Has anybody taken a minute to step back and look at the difference over the past 5 years with Coinbase and Binance? Massive diversion in overall reputation. So Binance has 250 million customers, right? Coinbase has 125. But who did everybody trust? Who did BlackRock and Bitwise and Fidelity and everybody trust associated with the custody, their biggest products, right? Coinbase. Binance
BNY Mellon trusted Ripple's custody.
Was not invited to the party, even though in the crypto space, hate Coinbase for some reason or another. But you can't really argue with the results and the execution over time.
Now, folks, you all know I'm not a financial advisor. I used to be one at Morgan Stanley when I was younger, but I'm not one now. So I can't give you financial advice, but what I can do is tell you, which I'm going to do in the private group, it's DAIXRP.com is the Patreon. If you'd rather join through YouTube, you can click join below any of these videos. If you'd rather join through X, you can hit subscribe. But in there today, I've been here since 2014, okay? I have successfully, I've seen it all in crypto, and I've successfully been able to remain here and do really well in crypto for a lot of reasons. But I'm going to lay out for you the way that I have approached all of this and some of the mistakes that I've seen made that are so common, and I still see it. You see it every day. I'm going to show you. It's very simple how I've done this and continue to do it, and how I'm going to win and how I have won. I mean, I've won to the tune of probably thousands of percent. Well, not probably. I have thousands of percent gain. Okay, and I'm going to tell you the simple way, and many of you are new coming to this stuff, and I'm going to tell you what to avoid because I see it every day, and a lot of it is just so, it's greed, I guess, combined with not understanding how things work, but I'm going to lay it out for you. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, tell your friends and family. Here we go.